Hey everybody, Courtney Smith here with our January 9th, 2023 edition of Wall Street Winners. Let's dive right in here. So I told you last week we'd see some type of a dip, and we really kind of went sideways until Friday when we popped up. Now that price action on Friday was very, very bullish, but look down at the purple predictor. This is on balance volume. It's continuing to basically make new lows. So I can't get very aggressive at following this, the sharp rally we had on Friday. I want to, but the smart money's selling, so I can't get too aggressive here. A little aggressive because I think we're in a big bull market. We've put in the lows in October. You can see here on the Dow, clearly those lows were put in place. Once again, strong rally here in Dow. We actually saw the buying pressure get above selling pressure for the first time in about a month. And I think that what's happening is we're continuing to see the Dow type stocks outperform the NASDAQ. The NASDAQ should start to outperform, but it has yet to do that. In some ways it has, but I'll show you the chart here in just a second. So my strategy here is to add to the portfolio slightly, but focus on Dow industrial type stocks that have earnings, stocks that have a balance sheet, stocks that are paying dividends. Those seem to be the ones that the market prefers. Now here's NASDAQ. We got almost down to the lows we made in October, whereas I just showed you the Dow, not even close. The Dow would be like up here somewhere, a huge divergence between Dow and NASDAQ, huge. Strong price action, but in the S&P and in the Dow, we surmounted this high. NASDAQ did not. So once again, we're seeing weak price action in the NASDAQ. Over here, IWM, a little bit stronger than the NASDAQ, but I won't turn my seasonality indicator bullish until we break above this blue line. So that's going to take a while. Now, normally bullish seasonality starts in October. In October. And I put this line up here back then using this high as my trigger point. We got up to it, but we failed to make a new high. So I have yet to turn the seasonality indicator bullish. When I do, I'll start putting on much bigger positions, 50%, 100% bigger positions. That's how I use seasonality to change how big my positions are. I don't buy because of seasonality. I change the size of my position. Here you can see this is the seasonality from Stock Traders Almanac. Recommend you subscribe. This shows we're in a bullish time period. But here we see asset allocation. Money came out of the stock market and into bonds. I'll show that to you in a second. Bonds are outperforming the stock market, but that's kind of a good thing, because if bonds are going up more than stocks, that means interest rates are coming down on the 10-year side of the interest rate spectrum, and that's bullish for stocks. So bonds can be a leading indicator at times for the stock market, and I think that's the case right now, because 2023 is going to be a big, big bull market. It's going to have some stumbles in it, no question about it. No question about it. I put together a video on monetary policy. Go to YouTube, go to search on Courtney Smith Trader or Trading. You'll find my channel there. Watch that, because I talk about the Volcker mistake. I think Jumpin' Jerome is going to do exactly the same mistake. So you got to watch that to understand what's going to happen in Fed policy and how then it's going to affect the stock market. Okay, Risticator. This was quite interesting to me, because usually when the Risticator is going up, it means the market wants to take more risk, which is bullish for the stock market, and we eventually saw the pop on Friday. We didn't really see it during the week, but we saw it on Friday. But it usually means that the NASDAQ outperforms the S&P and Dow. Why? Because it's riskier stocks. It's biotech. It's high tech. It's companies with no earnings or little earnings. We're going to have to wait, buy and buy before we see them make money. So this was interesting We saw risk come into the market, but it wasn't in NASDAQ type risky stocks. Very interesting. Global shares doing fantastic. They've actually outperformed the U.S. stock market. We broke above these highs here, which we have yet to do in the U.S. stock market. I'm going to get long foreign shares this week. I've been missing this move. I'm an idiot for missing the moves. I hate missing moves. I'm a pro trader. I'm supposed to be long during a market that moves this much in such a short period of time. I missed the move. I won't miss the next move. Yield curve remains in. Now, this was interesting. Last week I talked about how we had this rally in the yield curve. So we're negative. We got less negative last week. And I said that's a bit bullish for the stock market. But we gave it all up. Okay, we gave it all up. This is slightly negative for the stock market. Not a big deal. It's just a little bit of a deal. But this is very negative for the stock market. So here's what I think is going to happen. Wait a minute. I hope I said that right. It's very negative for the economy. It's a little bit negative for the stock market. And as we get more and more negative, it tells us that the recession that's going to come back in the first quarter of the year. We had 2 quarters last year. We're going to have a recession this year. It's going to be a long recession. Don't know how deep it's going to be, but right now I'm thinking it could be moderately deep. That's my best guess right now. But it's going to be longer than normal. It's going to be for the whole year, maybe longer. The Bank of England is saying their recession is going to last 2 years. So the fact that we're getting a more and more inverted yield curve tells me that this economy is going to be garbage for a year, 18 months. I don't know if it'll go 2 years, but 18 months is starting to smell more and more likely. So this is bad for the economy. Now, it's generally a little bit bad for the stock market, but here's what happens. It becomes bullish at some point, because we're getting to the point where bad news is good news. Why? Because the Fed will ease and flush a lot of money into the system, and that's bullish for stocks. Over here, you can see the bonds. While the stocks are going sideways, the bonds were rallying here. Our COGO indicator, which fully paid up members get access to, called this move beautifully. Purple Predictor shows that the smart money is buying, and we had the same pop we had in stocks on Friday, but we were already moving up. I think we're going to head up. We're going to break these highs and challenge the old highs. Interest rates on the long end of the yield curve are coming down, and they're going to keep on coming down. Now, here we have all of the indicators are saying lower interest rates, except gold. Gold is this line right here. It says higher. But 2 out of 3 of the other indicators are saying lower interest rates. And of course, fully paid up members get my best indicator for predicting the bond market, the COGO indicator. And, well, I wish you were a fully paid up member, and then I could tell you what it's going to do. Okay, so if bonds are coming down, then dollars should be under pressure. And here we can see it was on Friday, but the early part of the week it started to do pretty well. But once the bonds took off, the dollar took down. Now, if the dollar is going down, then gold should go up, and sure enough, there it is. I've been explaining to you why I've been bullish on gold for some time. Not wildly bullish, but I am bullish. Gold key indicators, we were 2 bullish, 1 neutral. We kind of degraded a little bit. We had a big drop right here in the CRB. That's raw material prices. And they dropped. So I had to downgrade that from bullish, and it was only slightly bullish, but I had to put that down to neutral. And if we break these lows over here, I'll turn it to bearish. Crude oil, as I told you last week, I think it's going to start heading down. It is heading down. We're going to break these lows. We're going to get into the $60 range here over the next month. Don't really have a position in energy right now. Bitcoin, I think this market is being manipulated, and we're about to break these lows down here. We're getting the rally up. This is being manipulated by the smart money. You can see the smart money was selling. Now they're buying. I think we're going to crack down. I think it's being manipulated. Okay, freebies, you know what to do. I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second, but this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it does lead, it can, if you do it right, you have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Labs scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. Maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, it's, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I'd normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented for as a formula, John Kelly, to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. I used many years ago. I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider Membership Program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. You get that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. Wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.